Hadra. Welcome to Uprooted.
Yes, and like we talked about in one of our last episodes, that we have a special guest with us.
This will be John. John, can you please introduce yourself?
Hello, everybody. Hey, Haj and Rose. Thank you for having me. My name is John McLaughlin, and I'm, going to talk to y'all about investing today. I'm very excited about it, and glad to be here.
Well, thank you so much, and welcome to our channel. Thank you for taking the time to join us on this lovely Sunday. So to kind of tell us about yourself and what you do.
Well, I am a 38-year-old father of four, married father of four, and I am, representing a group called the Abakas, which is a group that teaches Black people exclusively how to create generational wealth in the stock market.
Right.
So I'm a team leader with this group. So I, bring people into the group. I teach them everything they need to know basically about the stock market and how to use it to create long-term wealth for their family.
That sounds very interesting. So how did you get into investing?
I got into investing through some friends of mine on Facebook that I had known for a long time. They were in this group and I just saw them talking about it. So I started to ask some questions and see what they were all about. And just the more I found out about it, the more, interested I was. And so I decided to take the leap in, I think 2016, I believe, is when I joined the group, and, just been building my way up since then.
And what was the most
motivating thing that made you choose
take
it?
that leap?
Yeah.
Because we all get scared when we think about investing and losing money. That's the thing that we always think about, is the loss, not really gain at that point.
So what made it really click for me personally was the fact that anywhere else, your earning potential is capped, whether you have a job or whether you sell real estate or whatever the case may be. You're being paid by the hour, you're being paid by the year, you're being paid by a commission percentage.
Mm-hmm.
And there is a cap on what you're able to earn, which basically means there's a cap on what you're worth. And I don't believe there's a cap on what I'm worth. And in the stock market, it is the only, or one of the only, I can't think of another, but it is the only place where there is no cap on how much I can earn. It's up to me and my knowledge base to determine what I'm worth and how much I can make.
Mm-hmm.
And that was really what made me want to go into it so hard.
All right. So what kind of markets do you think are there to invest in for people like us?
There's all types of markets. There are, the stock market, obviously.
Mm-hmm.
There are the futures market, which is kind of getting in, and then you get into kind of commodities, things like gold and silver and corn and pigs and stuff like that. There's the Forex market, which is foreign exchange, so just, the dollar versus the pound or the yen or whatever.
Mm-hmm.
And then now you also have the cryptocurrency market, which is the digital currency that's really starting to rise up in the last, decade or so. Yeah, Bitcoin and Ethereum and those type of coins.
Okay.
What are some do's and don'ts when it comes to investing?
So some do's I would say are, first of all, be knowledgeable about what you're doing. That's number one. I think that's the key right there is, because I see a lot of people, I'm in a lot of different investing groups on Facebook and things like that.
Right.
And you see a lot of people that want to get into investing, but they don't really necessarily know what they're doing. And they're just, hoping and praying basically. And, they'll take advice from anybody on the internet. They'll just put a post up, what should I invest in? And whatever anybody says, they'll just be like, okay, and they'll buy it. Mm-hmm. And you really can't do that. You have to know what you're what you're doing. So I would say number one is get educated on how the market works, what drives the market, who are the key players in the market that really like prop it up. And, you know, the don'ts would be, you know, the opposite of that. Obviously, don't, you know, just wing it. And then secondly, have a plan and don't think that you're going to necessarily get rich overnight. That's another thing that happens to a lot of people is they want to make, you know, $100,000 in a month or 2 months, and it doesn't work like that. Like I said, there is no cap on what you can earn in the market, but it takes some time to build it up. You have to have a plan and a long-term vision. You can't just hop in and be like, okay, I'm going to kill these markets and get rich tomorrow. Like, you have to have a plan with what you're doing.
Okay, and not really get scared and take all your money back when you're losing.
I mean,
so the fear is a big thing. I mean, like you said, but the market is really, particularly with investing, the market is really one of the safest things you can do. So that's another key thing is the difference between investing and trading. Okay, because investing is a long-term idea where you're buying a stock and you're holding it for 10, 20, 30 years, long or possibly forever, and passing it on to your children. That's investing.
That's not what you're doing, right? Or is that what you're doing?
I do that as well, and then I also do trading. But a lot of people get into trading and they think they're investing, but they're not, because they're just buying stuff and they're hoping it goes up tomorrow, and then they're trying to sell it. That's trading, and that's totally different than investing. I mean, obviously they're related, but it's a much different animal, and it's a lot more risky. With investing, it's really, really safe. Like, for instance, if you buy an S&P 500 company, the Standard & Poor's 500 company, and you hold it for 20 plus years, you know, looking at the historical data, you have a 0% chance of losing money. And that's on data that goes back to like the mid 1800s.
So you lose money if you get the S&P 500, right?
If you buy a company in the S&P 500, you hold it for 20 plus years, you have a 0% chance that you're going to lose any money.
Oh, okay.
Oh, okay. So you will gain money. That's your
right.
Okay, but you gotta hold it for like. Can you, I guess, pull out before the 20 years?
You can, yeah. That's just a kind of an app, you know. So like, I'm referring to just like some historical data that tells you your risk level. So like, for instance, if you bought a company and you hold it one day, you have like a 52% chance you're going to lose money. And if you stretch that out to like 5 years, it drops down to like 20% or something like that. And then if you hold it, stretch it out to 20 years, there's a 0% chance. So there's different risk levels depending on how long you're holding things. But generally speaking, if you know how to identify a good company, a great run company, investing is the safest thing that you can do.
And is there somewhere people can go and look at the companies that belong to these groups, like the S&P 500? Is there like somewhere they can go and see, like, Publix belongs here or Aldi, to know which companies to buy into?
Yeah, there's, a lot of different places. I know, on the S&P 500, you can just, literally Google it and it'll come up. They have a Wikipedia page on it that tells you all the companies that are in it currently. And then there's, all type of market sites, like marketwatch.com and, Bloomberg.com and, there's a bunch of different financial sites that would tell you this information. They would give you all the information you would want on the company, including their financial statements and things. So Barron's.com is one where they'll have all that information on these companies for you.
So all this information is out there for people. We just have to go and look for it.
Yeah, definitely. The information is there, and it's accessible to anybody. You just have to look for it and know what you're looking for. Right. And that's another thing about the markets is that, in addition to people being scared about losing money and things, another thing that people are often thinking about the markets is that it's only for rich people. And that's definitely not true anymore. There might have been a time where that was partially true, where you had to, have a individual personal broker that you worked with, and you might have had to have a certain amount of money to get into the market. But nowadays, that's completely changed. So most brokerages have no minimums for you to deposit into your account. Most brokerages are not charging commissions on buying stock anymore. Most brokerages will actually give you a little bit of money when you open an account, depending on how much you're putting in. They'll actually pay you to join their brokerage. So this is actually the most accessible the market has ever been. They're really trying to bring in a new generation of investors, and really open it up. So that's another thing there, is that it's never been as accessible as it is today.
Okay, that's great to hear. So what should my goals be when I want to invest?
Your goal should be just to have, like I said before, a long-term vision, a long-term plan. So, if you put up even just $100 a month, so again, we're not talking about a whole lot of money, $100 a month, and you do that over 30 years, if you average 5% return, which is actually below the market average, you would end up with about $90,000. If you average up to 12,000, if you average 12%, which is slightly above the market average, you would end up with about $350,000. Okay. And honestly, I think if you really know what you're doing, you can really easily beat those numbers. For instance, I have a member of my team who just finished our class in January, and she opened her brokerage account in January, and her account is already up 45% in 6 months. So, if she continues to invest over these 20, 30 years, you can imagine what her account is going to look like based off of what I just told you. She should be probably, I haven't done the math, but I would imagine it'd be close to $1 million, if not above $1 million. So having a steady plan and consistency, not chasing overnight flips. For instance, Hertz recently was a big one where they filed bankruptcy and their stock came crashing down to a few dollars a piece. And then everybody was like, "Oh, I'm going to buy it because it's cheap, so it's got to go back up." And that's not necessarily true. It doesn't necessarily mean it's going to go back up.
Okay, so everybody was talking about investing. That's why I kind of started getting interested into learning more about it. And they were talking about Robinhood, Cash App, and I just thought, I already have a Cash App. Why not, start there, because I'm very new into this investing. So I did buy the Hertz, and I was thinking, okay, once the coronavirus goes away and people start traveling again, it's gonna jump up. But it's going lower and lower, and then I hear about this bankruptcy. That's what happens to us newbies.
Exactly. So and then Kodak was another one recently, because they got a big loan from the government. They had been a dying company for decades, basically. Obviously focused on primarily like technology and like photography, really. And the government decided they were going to give them a big loan to try to start making pharmaceutical drugs, which is totally an unrelated business.
Right.
And so everybody jumped on that. And now some people did make some money on it because it went from, a few dollars up to like $60 a share.
Yeah.
But, so there's a few, some people made some money doing that. But the majority of people would have caught that late. They would have got in at $40 or $50 or $60. And now it's right back down to $10 again. And they would be sitting in the hole because they were following hype, and not necessarily fundamentals of the company. Do they even have a product yet to sell? Like, are they bringing in any kind of cash flow? How much debt do they have? They don't think about those type of things.
Yeah.
They're trying to catch lightning in a bottle. And so, some people might catch a little lightning in the bottle, but a lot of the people are going to get stuck holding the bag because they got in late and they were just trying to follow the hype.
Right.
So you do those type of things. You got to really, think about everything going on with the company.
So what are the differences with mutual funds or stocks? Like, what's better to get into?
So, it's really a matter of, how, I would say, involved you want to be with your investments. Mutual funds are good and fine, but you don't have control over what you own, because, it's run by somebody else. So when you get into a mutual fund, they're good investments, or, most of them are good investments, but, you are not in control of your money, which is, maybe fine for some people. They may not want to have that level of control over their stuff. For me personally, I want to be in stocks because I control what I own. I control when I buy it. I control when I sell it.
Right.
With a mutual fund, that's not the case because somebody else is running it and they are in charge of what is in the mutual fund. And when something gets changed out of the mutual fund, that's all up to somebody else.
Okay.
So what do you think is the one company that is a must to invest in?
For me personally, I would probably say Apple. That's my.
I knew you were gonna say that.
I call Apple my boo. That's my favorite company. I think it's the best run company in the world. They have about $250 billion of cash on hand, and they're just always
going
top.
up.
Yeah, always top notch, and they're about to do a stock split coming up in a couple weeks. Which if you don't know, basically multiplies the amount of shares that you own. So if you own 1 today, and at the end of August you'll own 4, etc. If you own 100, you'll own 400, etc. So they're a fabulous company. They're run really well. They are quietly really developing a lot of, they've been iPhone focused for a long time, and they still are. Obviously, iPhone's very important, but they have their cloud services now, and they have their the Apple Music and things like that, where they're branching out. They have the Apple TV coming on now, so they really are developing a lot of other income streams besides just the iPhone. And so I think they're top-notch company in my opinion.
Yes.
Have you invested in Apple?
I have, yes ma'am.
Good for you.
That's
my nephew and niece are set. They good.
Yes ma'am. Yeah, they should be looking good down the line.
Yes.
Well, again, thank you so much. Do you have any tips to share with our fans before we end the podcast today?
Just that, again, to reiterate, I've said it a couple times, but if you really want to take control of your investing and your financial future, just get knowledgeable about what you're doing. Learn how to read a company's financial statements, their income statement, their balance sheet, their cash flow statement. Learn how to read those documents so that you can determine whether they are being properly managed or not. And if you don't feel comfortable learning those things on yourself, definitely come and check out the Abakas, and we can definitely help you out with that.
Whenever I get a job, bro,
And how can people get in contact with you guys and learn more about the Abakas?
You can look, you can find us on Facebook. We have a website called abakas.com. That's ABAKUAS.com, which can give you some information about us, and you can set up an informational session where somebody can help you, explain the process to you. So you can go to that website, abakas.com, or you can just go on Facebook and find us individually. Is usually how most people come across us. We're kind of a decentralized group. In the sense that we're not like an officially registered business or anything. We're kind of just a collective of people, so it's kind of operates on the each one teach one type of basis. So everybody that comes in has the ability to, reach out to people in their world, their family, their friends, and kind of expand a circle that way. So, but we do have that website, abacus.com, which you can check us out on, or on Facebook.
All right, great. John, thank you so much for taking your time out to be with us today and for all of your knowledge. We really appreciate it.
And we look forward to bringing you aboard later on in the future.
Yes.
That would be great. Thank you guys so much for having me. I really appreciate it.
Thank you.
All
right, guys. Thanks for listening. We'll be back next week with another episode of Uprooted.
Thank you, guys. Have a good day. Bye-bye.
Bye.